Hey folks, Dan Frio here with your opening bell for November 19th, 2025. So mortgage rates yesterday, they were stagnant. I think they're going to be the same way today. And the reason being is there's no news. There's just no news. But tomorrow, everything's going to change. So what's coming down the pike tomorrow? Well, it's going to be jobs, earnings, the unemployment rate, all the things the Federal Reserve watches. So my goal each day that I come in here, hopefully you're a homeowner, maybe a home buyer watching my videos trying to figure out what's going to go on with those and the whys behind it. So today, here's what we got. We have mortgage rates. They actually hit the highest level that they've have been in months now. So what's going on? Well, if you look down through here, remember I said Q4 of this year, we're going to have rates between about 5.99 and 6.375. That was exactly what I said. That's where we're hitting right through here. 6.375 is the high trend that we're hitting right now. So is this going to be the top? Or are we going to exceed from here? So that's what we're going to talk about in today's video because it's all going to be on the data that we get the rest of this week. What data is it? Well, let's dive into it. Folks, my name is Dan Frio. I come in each day to hopefully explain to you guys what the heck's going on with those and the whys behind it. And the reason why I do it, and I'm actually a loan officer licensed in all 50 states, as well as Puerto Rico. So if you're out there looking for a home loan or a mortgage or refinance, reach out to me. I'd love to help. My slogan's one application, one credit pool. We're going to compare your loan with over 30 different lenders. I'll give you my information at the end. Let's get to the news. So here's what we're saying. We said mortgage rates, they are actually just continuing to push up just a little. Every day it just goes up a little bit, a little bit, a little bit. And I don't know if you noticed, but they're the highest they've been in over a month now. So what's the backdrop of this and where can they go from here? That's why you're watching. So let's get over to here. Here's the markets. We finally have some green today in the stock market. That means hopefully there's a little bit of ease in the markets right now. We also have hopefully the VIX down. We got oil down below 60. That's good news. We got the 10-year Treasury down. We'd like this down as close to 4 as we can, kind of like oil at $60 a barrel. But so far, this is kind of a Cinderella story other than crypto. Crypto's getting hammered. This was $120,000 a coin not too long ago. It's getting clobbered. You're not here for those. You're here for this. So here's what's going on in mortgages today. So really, there's nothing. We don't have really any data here that's going to move the markets. Now, tomorrow, it's a whole different story. But here's what the markets are doing. MBSs are up 4. What does this mean? Well, if you watch my channel each day, this is what we focus in on, the mortgage bond, because it's the biggest component of your mortgage rate. So the yield on this thing, plus what they call LLPAs, and check out some videos I did up there in regards to LLPAs, plus bank profit margins equals your mortgage rate. So you have to really track this bond. If you don't have access to it, we'll track the 10-year Treasury. It kind of correlates with it. So if the 10-year Treasury is up, well, mortgage rates are probably up. If the 10-year Treasury is down, well, mortgage rates are probably down as well. Here's the economic calendar that we have. There's nothing today. Can you see up there on Wednesday? Crude oil inventories and the FOMC meetings. Now, what the FOMC meetings is that they're going to give us the transcripts. So when the Federal Reserve met last time, you're going to see contentiousness there. They're going to see some people saying, okay, we need cuts. And then others are saying, no, the inflation's too high. Jobs reports are too cloudy. So what should we do? Well, tomorrow we're going to get some of that feedback. Tomorrow we're going to get this data. This is what's supposed to come out. I won't be here tomorrow, folks. I'm going to be traveling tomorrow. So here's what I want you guys to look for. These numbers over here. Remember this. Here's what we say. The better these numbers are, the worse it is for us. Here's what I mean. Not if you're out of work, but the worse the jobs reports are and the unemployment rate and everything else, the likelihood or the higher the likelihood of the Federal Reserve to cut. So we really don't want people losing their jobs, but this data here, the weaker it gets, well, the better rates are going to get. So here's what we're looking at. Average hourly earnings, are they keeping up with inflation? Initial jobless claims. We're also going to get continued claims. They're going to see how much they're piling on top of each other. Then we're going to get, hopefully, the unofficial unemployment rate. Now, is this the one to really write home about? No, it's going to be really cloudy. So if it's really good, they're going to say, well, it's cloudy. If it's really bad, well, the markets will probably react badly and then say, well, it was because the data is cloudy. What I mean by that? We've been in a black hole for 50 days. So now we're starting to get the data, but they're going to have to do a lot of work to catch up to this data. So how's it going to come in? That's what I want you guys to focus in on. So again, the better these numbers are in a good way, the worse it is for the Fed rate cuts. So we want the unemployment claims maybe to stay sticky, to go up just a little bit, not crash. So this might help mortgage rates. So let's get over to here. Here's what the Federal Reserve. Now, finally, with some of the data we got right now, it looks like there might be a 50-50 chance of a Fed rate cut in December. So every day we come in and we watch the Fed Watch tool. Basically what the CME does, this is the Chicago Mercantile Exchange. They do options and trading and this and that. And they come up, what's the odds of the Federal Reserve cutting rates? Well, if you go down here in 21 days, the Federal Reserve is going to do what? Well, they're going to go through here. Finally, just finally, we went over 50%. Because here's what happened is, this gives us the projection of what the Fed is going to do in December, January, March, and so forth. But what happened last time when the Federal Reserve announced rate cuts, they're like, okay, there's going to be more cuts coming. Here's what they provided us. They provided us this right through here. This is the dot plot. And I know I went through this the other day, but you have to understand this. This is from the Federal Reserve. So members of the Fed come in and they put a dot where they expect rates to be, and right through here is where they expected it to be at 3.5 to 3.75. Well, here's where it is today. If you go over to the CME Fed Watch tool, we're going to go over to here. And let's see what it is today. So if we go to this, the economy at a glance, this is basically what the Federal Reserve monitors, but they control this number right through here. So they control the federal funds rate. It's currently at 3.75 to 4. Okay, so if you go back over here to the Federal Funds Watch, 3.75 to 4 is in this cell here. So even the Fed members told us we'd be down here by the end of the year because this is the last meeting of the year. So that means they're going to cut based on the dot plot. But then if you go over to the odds of this, well, most likely they're not going to cut, and that is right up through here on the probability section. So 50-50 chance they're going to cut. The dot plot saying they're going to cut. What are they going to do? Nobody really knows until the next meeting. But you need to follow this data if you're trying to figure out what's going on with these and the whys behind it. Now, if you're a homeowner right now, I got some tools for you. Wonder if you could plug in your numbers and say, okay, when mortgage rates hit 6, let's go over the numbers. Well, you can do that. I actually created a tool right through here. If you go to my website, it's called the Rate Update. I'm actually the host of the Rate Update, and I do this every day to inform you guys what's going on. Just go through here, the Rate Watch 2.0 tool. This will provide you the information. Just put in your information. I don't sell the data. I'll monitor this for you, and then when rates hit exactly where you want them to be, I'll reach out. We'll go over the payments, the costs, and see if it makes sense. If it does, we'll get the paperwork started. Wonder if you're looking to build. Wonder if you're looking to buy maybe in the next 2-3 months. What are rates going to do? That might be what you're looking at now. So let me give you my best guesstimate on this. My thoughts are that the jobs numbers aren't going to be as dismal as the markets think. That's my thoughts behind this. We have conflicting data. We have data on one side saying 154,000 people got laid off in October, the worst in 22 years. And then we get the Federal Reserve coming in of Chicago saying basically the unemployment rate is staying sticky. So what is it? Well, tomorrow, hopefully, we're going to get some of those numbers. So I'm expecting the long term of this over the next 2-3 months to be basically steady. There's not going to be, I don't think there's a huge crash in the jobs market. Thus, we're going to just have stability in the markets. Hopefully, at some point, also the stock market gets a little bit of back on track. Now, we were due for a pullback in this, and that's why I've been telling people, if you're a trader, you should have pulled some money off the table 2, 3, 4 weeks ago when I was like, okay, these are getting a little frothy. Okay, so now if you have some dry gunpowder, it might be time to kind of look at some of these things. But if you're an investor like me and a lot of people out there, we just dollar cost average. We just watch this go, and yeah, we sit here and hit ourselves upside the head when the market's down a little bit. But on the upside, we won't lose that upside, and that's where you lose out a lot of times. But if you're here trying to figure out what's going on with mortgage rates and you're looking to build in the next couple months or the next 6 or 8 months, I don't think you're going to see these really skyrocket. I'm still saying my Q1 estimate for 2026 is 5.99 to 6.375. And when I say 6.375, mortgage rates, I don't know if you understand this, they go in eighths. So this rate really doesn't exist. 5.86. This would be 5.875 or 5.75. They go in eighths. So it's 6 over there. When I said 6.375, it's basically 6.38. So that's as high as I'm expecting them to be. And that's why you're also seeing here mortgage rate the highest level that we've seen in a while. So I'm not expecting them to spike anytime soon here, but the data is going to be important. So remember, I'm not going to be here tomorrow. So focus on these things over here. The better they are, better in regards to they look good, that's not good for us. We want these to kind of look a little bad. So we want an unemployment or initial jobless claims to not look as so good. That'll force the Federal Reserve to cut. And then from there, we know mortgage rates aren't going to go down specifically because the Federal Reserve cuts rates, but it's at least a start to those rate cut cycles. So I'm expecting rates to be flat as a pancake once again until we get that data tomorrow that we really need through here. So pay attention to how this opening bell works tomorrow. I will be back on Friday to fill you back in on all these things, and I will be back today at the closing bell to let you know more of what to look for tomorrow. So if you're out there looking to build, buy, refinance, I'd love to help you. Now, what's that slogan I have? I have a slogan. It's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? It's pretty simple. You put in your application. What we're going to do is pull your credit, get you approved at the bank. I work at a bank, and I'm licensed in all 50 states as well as Puerto Rico. Then we work with over 30 other lenders. We can use their rates, their programs. How does it work? Well, check us out. I will be your loan officer through this whole process. That's what you can be assured of. So use my 35 years of experience to help maneuver you through this market. So check out the rateupdate.com. We have tools here for homeowners. If you're in the middle of a quote right now and want to compare over 30 different lenders on that, check out the loan estimate review. All you need to do is upload your loan estimate. We'll do a video breaking down your loan, fees, rate, and if we can beat them on the fees and the rate, we hope to win you as a client. So that's it for today this morning, folks. So pay attention where mortgage rates are going. But right now, MBSs are up 4 ticks. That really doesn't mean mortgage rates are going to move at all. So I don't think there's really anything that's going to move these things today. There's just still no economic news. So that's our report for this morning, folks. Thanks for watching. If you haven't subscribed yet, please do so right over there. So every time I post a video, you get an alert. Thanks for watching. I'll see you back here at the closing bell to let you know how this mess ends for the day. Thanks for watching, folks. I'll see you then. Bye-bye.